This is the briefing for Friday, September 29th. To review very quickly, we're looking at the possibility of three different price patterns that could give us basically two bearish day patterns and one bullish day pattern. And that bullish day pattern basically is the fact that we're in an area of rotation. And you can see that right through here. So the question is, we are now testing the lower extreme at 430. And as to whether we're going to see a rotation all the way back up again. Now, certainly yesterday brought us to right at that lower extreme, which is now resistance. And today we opened up and traded slightly above it, but reversed pretty quickly. The other scenario is that this is a three-step counter trend rotation. And the fact that there's potential equality between legs 1 and 3 shows that the potential was down to the 427 area, and we went down on I guess Wednesday's trading to the 422 area and then bounced off of that. You can see the buying tail that came in right there, and then of course we reversed back down below 430. And then the third pattern, which is slightly becoming potentially the lower probability, is the fact that this is a potentially bearish day pattern. And we could see the fact that we could accelerate from this area and test lower support levels. Now, the longer we linger in this area, the higher the probability that that is not the case, and we're going to see some type of rotation back to the upside. So in the first two, we have reached the support levels. 430 being in the spiders, where this is the lower extreme, and 427 where we have equality between legs 1 and 3. So that leaves the third possibility of that we're going to see an acceleration to the downside, and that is yet to be seen. Now, we did have a reversal day today, and you can see that pretty clearly. Volume ticked up today. Breadth fell off fairly nicely. This is S&P breadth, so there were 115 shares more that were trading lower as opposed to higher. But the 52-week highs minus 52-week lows picked up. Now, we were trading down in the low 600s a couple days ago, and so we've recovered pretty nicely in that. But that is the only internal component that I see right now that is strengthening. In the NASDAQ or the Qs, same situation. You can see this rotational pattern. So the question is, are we going back up to 390? Now, the Qs traded above yesterday, above the 355, 356 area, and closed above it. And of course, they closed now at the lower end of that and testing that 355, 356 area also. Volume ticked up, breadth ticked down. Going to be very interesting on Monday to see what happens there. The Russell, a little bit different price pattern here. This appears to be a three-step counter trend move, and it projected equality between legs 1 and 3 at 175. That's exactly where we went to in trading beginning on Tuesday. And of course, we are now testing, and we tested today, the 180 area, which is upside resistance. So it will be interesting to see if we trade above that or if we begin to see another trade below. Now, in the IWM, it gives us really some good areas of trade location. Trading above 180 is going to suggest the rotation back through this range. Trading below 175 is going to suggest the potential that we're going to see much lower prices, 170 being the next level of support, and then below that is an important 165. And I say that because we have a head and shoulders top here. And we've broken the neckline. Neckline was at 180. We came back, retested the neckline in today's trading. And then, of course, if we now break 175, that's going to open up the potential to trade down to 170, which is this lower extreme, or we're going to see a test of 165. Once again, volume ticked up, breadth in the Russell declined also in today's trading. Looking at where we are in terms of overbought and oversold, we were approaching an overbought condition yesterday. You can see where the NYC was. This is the NASDAQ. So the reversal that we saw today was a pretty good reversal, suggesting the potential that we're going to see the possibility of lower prices. And volume ticked up. This is volume in the NYSE. That ticked up. It ticked up in the NASDAQ also. So this reversal here in the Qs and in the spiders appears to be a stronger move than the first two, the previous 2 days, which would be Wednesday and Thursday. And you can see that there, this buying tail that came in. And then, of course, yesterday, where we had a tick down in volume, even on higher prices. So there's a volume divergence. And then, of course, we had the reversal in today's trading. Now, probably the most important thing we're looking at is the percentage of stocks above their 50-day and 200-day moving average. This is for the S&P 500. And you can see this is not positive for the indices. I mean, this is showing a lot of weakness in the indices themselves, and in this case, in the S&P. So you can see that right through there. Now, if we go all the way back here, we could expect much lower prices if this holds true. So you can see the weakness that's occurring in there. In the NASDAQ, you can see that we're very, very weak. Only 23% are above their 50-day moving average and 31% above their 200-day moving average. And the Russell only 18% above their 50-day moving average and 31% above their 200-day moving average. So very weak internals in the market. It's going to be very interesting on Monday to see if we break the lower support levels, and probably the most important in the spiders is going to be this 422 area. But now, in my experience, when you see a buying tail like that, or a buying candle, if that gets about half retraced, probably right down to about 424, that's going to suggest that the whole tail is going to get retraced, and that means that the buyers who bought that are not defending it. And if they don't defend it, then they're going to have to sell it. And if they sell it, then you're going to see this low taken out. If that low is taken out, that's going to open up trading down to 418 and through it, and then potential to trade down to the 403, 404 area. And the same thing with the NASDAQ. You can see the buying tail right there. I can't because of the crosshairs, I can't really show it with the cursor. But if that's traded through, actually you could look at yesterday's low in the Qs. If that's traded through, that's going to be more than halfway of the buying tail, and that would suggest it's going to get taken out. Equality, once again, is right around the 347 area. And then, of course, if we look at today's trading, what's going to be very interesting in terms of today is the fact that in yesterday's briefing, I talked about this being another three-step counter trend move, and the projected equality between legs 1 and 3 at 430. And remember, 430, very important key reference area in terms of the longer term or the daily chart of the index. Now, I stated in last night's briefing that trading above this high would suggest that we're going back up in a rotational pattern. Trading below this low would suggest lower prices. Now, we did trade above that high. Certainly, I use a 15-minute chart for my trading, and we did not have follow-through in the next 15 minutes. So I stood aside on this until we traded right below this low here, which was the 430 area. And I want to show that once again on this is the 430, that is the NASDAQ. This is the 430 area on the spiders. So you can see how important that area is in multiple time frames. So we traded, closed below it. They tried to rally it back going into the close today, but then they had a selling tail on a 15-minute basis as well. You can see how breadth declined as well. Same thing occurred in the Qs. This three-step projected equality between legs 1 and 3 at 359. We traded above that in today's trading. There was a little bit of follow through in the Qs, but then we reversed and started lower almost immediately. And in the Russell, I projected the completion of legs 1 being equal to leg 3 at 177. You can see we've traded pretty much above that yesterday and today, but then there was no follow through in today's trading. And of course, we saw Russell breadth declining pretty dramatically through the whole day. So basically for Monday, it's going to be very important to see what happens in terms of this 430 area and the spiders in terms of the 356 area in terms of the Qs, and then of course the 175 area in terms of the Russell, going up to the 180 area in the Russell as well. So if we are going to see the rotational pattern continue, it is not uncommon to see a false breakout and then rotation back through the range. But if we break, I feel pretty sure if we break Wednesday's low, that's going to eliminate this rotational pattern, and that's going to suggest that we're going to see lower prices, eliminating also this being equality between legs 1 and 3. It should be complete. So basically there's two possibilities for a bullish case, which is this is going to be rotation back to the upside because we have reached the lower extreme and we have reached equality between legs 1 and 3. But if we break through Wednesday's low, then that's going to suggest eliminate those two possible bullish scenarios, and that means that we're probably looking at this bearish scenario that I've been talking about for the past 2 weeks. Same thing with the Qs, same thing with the IWM. Have a great weekend. I'll pick this back up on Monday. Monday and Tuesday next week should be very, very important days. Have a great weekend.